to FountainFX on Thursday the 6th of March 2014. We can see that the fundamentals are definitely kicking the technicals at the moment. We can see that the technical indicators are saying, based on the MACD, price should be pushing down. In contrast, price is turning around and pushing and creating new highs. Why is that? Let's take a look as to what could be going against what the technicals were telling us in both this previous area where price was flattening out and the momentum was declining, and therefore we were expecting a downtrend to emerge, only to see price push higher, even with a continuing reduction in the momentum. Price pushed higher, then it came back down again, and today it's just turned around and pushed higher. How can we be able to make sure that we're not caught on the wrong side of a market when it goes against all of our predictions? Well, let's just take a quick look at the news, and the news from yesterday and the news from today, just to try and see what could have possibly kicked into this. And when we look at yesterday's news, we were looking at 3.15 yesterday, the US dollar, this ADP non-farm employment change data, and also the non-manufacturing data. We were expecting them to be either the same or positive for the dollar to gather strength, and they've actually been negative. So that was not good for the dollar, therefore good for the euro. So that's one reason. Let's go and take a look at what's happened today. So looking at the news today, we can see that for the US dollar, unemployment claims have actually come down. They are slightly less than predicted, so that's positive. Maybe not that big of difference, but we've had the Europeans talking and also the Americans talking. So it may have been what they were saying at those conferences that may have been impacted on the actual currency. So let's go and see if there's any impact. Now, if we flick over to Market Watch, which is the Wall Street Journal online, we can see that there's a report here about fundamentals don't matter because it's already a bubble. Now, when they're talking about a bubble, they're talking about a market that's growing and growing and growing. It's inflating like a bubble inflates with air, and the market, without any real clear direction or understanding why it's going up, is going up. And the reason what it's talking about is it's talking about the S&P 500 is continuing to grow quite rapidly, and they're calling it a bubble. There's nothing, there's no foundation as to why it's going up, other than the fact that they are talking about it's the Fed's quantitative easing and 0% interest rates. So it's the printing of money in the US, 0% interest rates, and therefore it's weakening the dollar, which is helping their exports and their multinational businesses in terms of their international trade. So that's really what's happening here. That's what seems to be fueling the S&P's rise. And with the S&P rising, it means that money's pouring out of the dollar and into stocks, and therefore the dollar is weakening. And that's really sort of the underlying fundamental, if you want to look at it that way, that's causing this reaction to the market, which is going against what the actual technical and what the charts are telling us. So, but the key thing that I always teach is, don't do what you think you should do, do what the market's showing you to do. So if we flick back to the chart, so if we look back at the chart, we can see that despite the MACD saying that momentum is down and price is pushed down, not necessarily continued in the downward trend, but the technical indicators were saying expect price to fall. Price has broken through that downward trend and has turned and pushed heavily upwards, a move of around about 120 points today. Now, if we can go into a smaller time frame just to take a look at how we could have managed this situation so that we don't get caught on the wrong side of the market when it goes against prediction. And looking at the 60-minute chart, literally from around about 4 o'clock on Tuesday through to 3 o'clock today, price was very much just flat in a 20-point channel. So the opportunity here was to place a buy signal, a buy stop above and a sell stop below, and that would have been a great trade to have got yourself into this long trade, because 5 pips above this channel, you would have been triggered in around about 2 o'clock today, 1 o'clock today, with as price pushed up. You would have been sweating a bit as this wick formed, but with the stop 5 pips below this channel, you'd have still been okay. You'd have been kept in the trade, and then price continued on up. So nice trade. You could have managed to move your stop up to be below this 138.35 area here, and basically have a stop down below there, banking in all that profit as prices moved up. The other thing is with this trend line that I plotted, with the break of the trend line, we can see that obviously momentum wasn't continuing down from here, from this high to a lower high, as price went sideways. So it would have been really a case of wake up this morning. It would have been rather irritating from 8 o'clock this morning with price just moving sideways in the channel, not really doing a lot. Nice buy order down here at the bottom because it's support. You'd have probably made about 20 points as price moved above. But really, it's a great opportunity was when this wick formed with the New York Open to have got in on a buy order just down here at the support level. So various options, ways of trading. Easiest one I like is channel trading. So you just put a buy stop above the resistance level and a sell stop below the support level to pick up on the breakout of the channel. Great strategy, and if you had done that today, you'd have made a nice 120 points trade where price is now. So anyway, happy trading from FountainFX. We'll catch you tomorrow.